Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 5th, 2008. Well, we had a monster rally today, and you have to be impressed by it, any way you cut it. The Dow was up more than 200 points, the NASDAQ was up about 47 points, and the S&P was up about 27 points. So across the board, you have 1.5 to 2% gains on the indexes. And the interesting thing about today's rally was that you really had oil screaming higher as well and the dollar getting weaker. So overall, it looks like what they're attributing it to was the jobs report this morning. Any way you cut it, there was jobs reports and retail data that seems to have lifted the market initially and really caused this. But any way you cut it, if you want to look at the base and the technicals of it, this was a short covering rally, a short squeeze rally in the markets. And this was apparent later in the day when we actually had a sell-off like the last couple days early in the afternoon, right around 1:32. And then sure enough, as soon as that selling got a little, extended on the downside, they just squeezed the market up, squeezing all the shorts, making the shorts cover, and pushing the market to close right at the highs of the day. Alright, so a monstrous rally today, no doubt about it. Now, the question will be, how does this set up the rest of the week, well, mainly Friday, and where does this leave us for next week? The more we're seeing is the more it's looking like a chop shop. And what's a chop shop? A chop shop is a very choppy market. So we're looking at more near-term choppy trading, and what we mean by that is you're going to have days where the NASDAQ's going to drop 35, 40 points, and then days where the NASDAQ rallies 35, 40 points. You're going to have the constant whipsaw back and forth, which as traders and swing traders, and we mentioned this yesterday, it's really more of a day trader's market right now because of this activity. A day trader can, be in a position one way and just inch out during the day on a move and prepare to go the opposite way the next day or intraday, as opposed to a swing trader who's holding for a week or so or 2 weeks, and that makes it very tough to do as you're constantly going up big and then down big and you're going to get stopped out. So we always have to abide by stops, and that's why swing traders are having a little more trouble right now, and the day trading market is much better. Alright, so we'll continue to look at that. We're also going to touch on the oil move, and the overall outlook is this is what we're seeing here. We're seeing the choppy trading with a slight favoring to the downside. We don't, even after today's rally, a lot of people asked us, well, what are you seeing? Are you seeing a more upside? Does this rally negate anything? Well, no, really what you did today was basically come back to having a flat week. Monday, Tuesday, Wednesday, we had called for the down move. Yesterday, moving to a neutral stance, and we didn't expect necessarily this much of a rally, to be honest. This was a little bit of a surprise that we got this much of a push, but we're going to have to maintain the neutral status for tomorrow in the market, meaning it could go up or it could go down, and we'll just look towards next week, which we expect possibility of more downside in this market, but it's going to remain choppy, and that's the key, is that you have to understand that, is that there's nothing easy about this market. As we're finding a bottom here in this area before we see a summer rally possible, it's going to be whippy. They're going to try to get all the little guys, kick them around, get them out of the market. The large institutions are going to continue to do their thing, and we're going to have to watch financials very, very closely. So keep an eye on that, folks. It's going to be key, all right? So let's take a look at the intraday market here, and I'm going to flip to the intraday chart, and we're going to take a look at what we had today on the markets. Alrighty, let's look here. What we see is the markets were pretty much up and away. And you can see the general channel that they made all day, and every time they hit the top of that trend line, they saw a nice little fall, and you can see here, so you really had an up move, down, up, down, and then up to close right at the high end of that channel. And you can see the parallel lines, how the market pretty much stayed in between, except for a few of these dips here. Volume today, you always want to know how volume is on a rally or a big decline, and to be honest, the volume today was basically, seemed a little lighter than the last couple days. It wasn't much lighter, but for such a dramatic rally, you'd like to see a little heavier volume than the previous fall days if it's going to signal that it's a new trend starting on the upside. So we'll have to continue to follow the volume, and we can check out the volume by, let's take a look here. Alright, and here you can see, guys, right here on the volume. This is the SPY daily, by the way. Here's 2 days ago the volume. And then yesterday was a little more than yesterday, and today you have today's volume right there. So we'll take a look at that now as we go into the daily chart of the SPY. And number one, so you have the drop here we were talking about, right to the 50, the bounce, then the retrace down from Monday, Tuesday, Wednesday, fall, and then today you basically have that strong move up. And you have to respect that move. There's no doubt about it. We have to respect it. The question is, where does it lead us? And we'll have to continue to watch tomorrow, and that's why we're maintaining the neutral state in the markets right now, is because we want to see where this market opens up. We got jobs data tomorrow. We want to see, does oil go up another, does oil continue up back towards the highs again? We feel that oil will continue down, even though this is a near-term bounce. It's a retrace. Believe it or not, the beauty of today's oil was almost a retrace of 50% off the highs. So a retrace is a normal Fibonacci retracement, and we're going to have to watch closely over the next few days on oil to see, do we start to come back down after that retracement. Very possible we have a pause day tomorrow in oil as well, and we'll have to watch that. All right. So nonetheless, we're going to keep a neutral state for tomorrow to see where the next piece of the puzzle. Once we get tomorrow, we can probably make out where the market will head next week, but we have to see tomorrow to see that next puzzle piece to really be sure on this, all right, after a dramatic rally in the markets today. All right, let's take a look at the oil, and we'll look at the USO to check out the oil, because this is what I want to talk about here. Here's the USO chart, and again, you had this long uptrend, right, a long uptrend. Then we had the topping point right here, right around 108 on the USO. We had the dramatic decline here all the way back to about $99 from 108, and now you had a nice little bounce closing it. We were as high as 104, which was almost a 50% retracement on oil, and we're not quite there yet. That's a pure 50%, but it's close at this stage. And now we want to see, do we kind of go sideways here? Do we go up a little more, or do we start to fall back down? And this is the point you're looking for on oil, guys. Is a break of the low here would be the next wave down, probably taking you to the 50 moving average on the USO. And obviously on the upside potential is double top resistance at this stage, although we are coming into that Fibonacci 50% retracement. Then you'd have 0.618, which will also be major resistance, and you can calculate that by just taking the high number and the low number here and figuring out what 0.5 is, what halfway is, and what 0.618 is. Alright, so that's up to you to do, but right now we're about that 50% area. Alright, so again, as we just look across the board here, you saw solar stocks bouncing today. Solar stocks have been hit pretty hard lately as oil was coming down. When oil bounces, alternate energy also bounces, as it makes a more viable alternative when oil is high. So you saw that happening a little. Technology today was pretty strong. The NASDAQ, we've talked about this yesterday. The NASDAQ just continues to roar ahead. Money flow continues out of it seems like commodity stocks for the most part into technology. You had Google up 14, Baidu up 17, and Apple up about $4 today. Research in Motion up a 3 1/3. So a nice day overall, but it wasn't a dramatic move up. You didn't say Google up 40 or 30 points. So overall, for the NASDAQ being up as high as it was, you didn't see those plays really gaining as much momentum. What we did see financials leading this market, and that's important. Remember, we've been talking about how the Monday, Tuesday, Wednesday was predicated on the XLF and UBS charts, and there was a bunch of charts that were not healthy. Well, finally today, you guys see the bounce in Lehman today, up $2.50 on Lehman. Phenomenal bounce. UBS up $1.63, finally getting a bounce, and that's what's helping the market here get a little bit of a bid. Now the question is, does this stay, does it continue, or does it fall? Alright, and we'll have to continue to watch that over the next couple days to see where these financials shape up. Any way you cut it, this is probably one of the uglier charts you've seen, and you're actually, on just looking at this chart, you're going to see resistance right here on UBS as you have a gap window. Alright, so watch this be resistance right here, and as you can see, it paused today right at that window area on UBS. Alright, let's look at the XLF quickly here. And again, the XLF, this is not a very healthy chart, but it does, it is a chart that wouldn't be surprised to get a bounce to this area. That wouldn't be shocking. In any case, it's going to be an interesting next couple weeks. Again, we're seeing that choppy trading through options X. They're going to try to whipsaw. Remember, once you get into option X, you have whipsaw Wednesday. You have them obviously pushing the market whichever way, the opposite way of the average person or the majority of the puts or calls. Whichever one is bigger, they're going to go the opposite way of the market, and they're going to try to whipsaw everyone out. So be ready for that whipsaw trading. After options X, we're trying to find out from our technical analysis and proprietary techniques what we're expecting. Alright, there is a possibility of a summer rally. We just have to see where that's going to start, if it is going to start. Alright, other than that, that's pretty much it. Just scanning over my watch list here. We had a couple nice calls on the day trading side today on some mid cap and small cap plays, and there were some good plays alongside on some of these other ones here. But nonetheless, a very interesting day. Good rally out there. Strong rally, needs to be respected, but let's get that next piece of the puzzle as we remain neutral for tomorrow. Have a wonderful day, guys. We will talk to you all tomorrow in tomorrow's video.